Hello traders, Gary Wagner here. Just before 10 o'clock in Honolulu, 3 o'clock in New York on Tuesday, March 22nd, 2016, and this is the Daily Report for Gold and Silver. After trading to an intraday high in the evening session last night of 1260, we do have gold trading higher on the day, although well off of the highs, trading at 1274 and change. Low on the day has been 1242, so about $5 off the low. And as I said, we are trading currently about $4.50 higher at 1247. Of course, our hearts and prayers do go out to those in Brussels. Traders, as I watched this market trade last night, there's absolutely no doubt I was going to issue a buy signal. Market was trading roughly at 1253 to 1255. I even put out a stop placement. In fact, let me go ahead and pull up a print of the chart that I did not send out. And in hindsight, I'm happy I didn't. As you can see at this point, it was trading at 1255. And really what I noticed, and that's what I do want to talk about a little bit today, is the fact that this particular consolidation is not unfolding, I don't believe, as a standard ABC, but rather as a compression triangle, and a compression triangle in which we have a series of lower highs and higher lows reach the apex, and then it breaks one way or the other. That's typically what you see. I did not send that out, and the reason being is I was not convinced that we would have follow through. And as I saw the market stalling and realized this is after trading to 1261 and then trading lower on the day, so we are flat in the market. I have not sent out any trade alerts as of yet. And on today's video report, what I want to talk about a little bit is how we use the Heikin-Ashi or Japanese average charts really to determine to a great degree what kind of waves we are looking at. And here's what I mean. When we take a look at the chart that I have on the screen, there's absolutely no doubt when we have a trend intact, it is a succession of green candles. The green candles will lose their lower wick. That gives you some sign of strength. At some point, you will go to a pivotal doji, and then you'll do that color change or that pivot. And so here we go to red. Then here we transfer back to green all the way up to what we're labeling as the top of three. Now, here's what's interesting. When you take a look at what we saw transpire in this small wave two, it was a succession of red candles. And when we look at what we're seeing in this wave four, rather than it being a succession or a consistent amount of red candles, you're getting alternating candle color, because here you're getting red, green, and so forth. And so when you get that alternating candle color and you're getting that series of lower highs and higher lows, it tells you you're looking at a different kind of correction, and it's more appropriate, I believe, to really label it a corrective consolidation, because what we're seeing is prices stabilize at a certain point, a certain baseline, before moving to higher ground. And that's what you get here. So we get this fifth wave up, and up until this red candle here, it was solid green. And then we went pretty much solid red. As you can see here, we're green, and now we're in our red again. So my sense is the fact that we're getting these short-term alternating candles tells me that we could in fact be witnessing a real consolidation in the market. Based upon that, we simply want to see where this market wants to go to. As I said on Friday, we could have already hit the lows, and the more I look at the trading activity within the last couple of days, my sense is that might be the case. So we are going to be looking to add a position here. It will be, I believe, a long position, and it will be in gold. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.